This is video related to the conversion of a partnership firm into limited liability partnership and then private limited company. In this chapter, we'll try to understand accounting procedure. Our focus is not to learn the theoretical procedure, that means the actual the formalities that procedure followed by CS, or in conversion you have to fill various forms and what. We will not going to learn all those forms, but we will definitely learn how to do the accounting after the conversion or on the day of conversion. First we'll try to understand why we have to convert our firm into partnership firm, into LLP, or into private limited company. In India you will find more than 7 types of persons. They all are not natural person. As per the spirituality, you will find 84 lakhs of species. In that you will find 4 lakh species related to the human. That means there you will find 4 lakhs types of persons. But in income tax, in a legal sense, you will find 7 types of persons. Why these different persons are there? Why not only natural person? Because a natural one person is having only 2 hands and 1 brain and very limited capital contributing capacity. Therefore law allowed is other forms also. In other forms collectively you can do the business. In HUF collective family business you can do. In partnership collective friendship business, that means you friends and then your what known people can come together. Your relatives also can come together in partnership, and then you can start private limited also, you can start public limited also, you can start trust also, etc. and etc. These are the forms. Then why we have to shift from partnership to the LLP and to the private limited? Because in a partnership you will find limited capital contributing capacity. As per Partnership Act 1932, previously we were having only 10 maximum partners in a banking business and 20 maximum partners in general partnership. That means maximally we can accommodate only 20% in a partnership. You will get only 20% capital, their 20% capital contributing capacity in business. With only 20% you will not get unlimited capital. You cannot do or you cannot expand unlimitedly in your area of work. Therefore by keeping this in mind, currently Companies Act made some changes or advice to the Partnership Act, and then as per that change, currently you can accommodate 100 persons as a partner in a partnership firm. That means now 100% can contribute capital in business. That means the partnership business capacity of contributing also increased. But that is not sufficient. If you want to expand more and more, then we change the form from the partnership to the private limited. In a private limited, you will find maximum 200 members. That means their capacity is more than the partnership. In a public limited, no such limit. Any number of persons can take part in publicly limited as a partner or as a shareholder. That means what? You can create huge capital, and because of that capital you can do very big business. You can earn unlimitedly also. Now we'll be shifting towards the advantages This is one major advantages, and then after that other advantages It's 9:41. It's 9:41. No, I think so. It's audible. Here, I do not find. Okay, now sound is on. I got the comment also. Now, please post the comments, then I will come to know. Now, here, what I taught you so many things. Now, why to convert, I have covered benefits. Then after that, I am not again repeating all these things. You can see after the lecture. That means after this lecture I will be posting same video on YouTube at that time. Yes, my second software is recording this video. You can get audio also. Now in a step, till now we have covered these steps. In a first step you have to close partnership business. Then after closing partnership business, in a second step we'll calculating purchase consideration. In a third step, yes, we'll be passing opening entries in new LLP or in new partnership. And then after that, in a last step we'll be making balance sheet. And then yes, making balance sheet in new company. Now as far as closure of partnership firm is concerned, we have to follow some steps. These are the steps. First, in a format you have to open some accounts. Which are they? Here you have to open realization account. You have to open realization account, then cash account, then new company account. Yes, and then yes, if any adjustment related to particular item, then that account. And then after this you will find the transfer stage. In a transfer stage we will be transferring our balance sheet, partnership balance sheet, in realization account. This transfer stage is very easy. While solving problem I will teach. And then after that we have purchase consideration due stage. In a purchase consideration due stage you have to apply a formula, very simple formula: agreed value of assets taken over by limited liability partnership firm or the company minus agreed values of liabilities taken over. Calculate this purchase consideration in due stage. And then after that PC received stage or receipt of PC. In this stage you will be getting cash or shares or debentures or the preference shares from new company or from LLP. Cash is real thing from cash point of view. Here you know the real accounts golden rule: if comes in then debit. Here cash comes in, as like cash other items are also comes in, therefore give debit to all. Entry will become like this: cash account debit, shares account debit, debentures account debit, preference shares account debit to new company. Okay, now this is all related, all about the closure of partnership business. Now in your book I think so you have been given the procedure. Now we will try to understand this procedure in deeper way. Now, this is the procedure. Now here what they are saying, you have to, they are saying that Now they are saying us to open realization account, partners capital account, cash or bank account, limited liability partnership account. That means this is a new company account. New company account. Then after this, they have given transfer stage. In this stage, we're going to transfer balance sheet to partners capital, cash and bank account. Now in a first stage, just you have to open these ledger accounts format. In a format you will find debit and credit side, particulars rupees. This is realization. Then in a partnership capital account, partners capital account, you will find accounts of partners. That means here you will find one more column. Hmm. And here also you will find one more column if two partners are there, and if more than two partners, then you will find more columns also. And then after this you will find transfer stage. In a transfer stage, you have to transfer uh, what? Balance sheet in these accounts. Now balance sheet, assume that we have balance sheet in T form, that is horizontal form. On a balance sheet liability side, this is the liability side and this is the asset side. On balance sheet liability side, you will be getting capital of partners, then after that the sundry creditors, then after that the current liabilities, and on asset side you will be getting here fixed assets like building, furniture, etc. and etc. Then sometimes investments, some, and then after that the cash, sundry debtors, etc. In a transfer stage, you have to transfer asset side, that means the credit side, that means the right hand side, to the left hand side of your concern account. If questionnaire examiner says you credit in question, then you have to say debit in answer. You have to transfer on a debit side. That means fixed assets on debit side of a realization account. Investments are on a credit side of a balance sheet. That means that you have to transfer on a debit side of a realization account. Sundry debtors here on a credit side, therefore in answer, that means in a realization account on a debit side. As far as partners capital account, now ignore for the time being partners capital. Now after this you will find sundry creditors and current liabilities, both are on a debit side. Those you have to transfer on a credit side of a answer. That means the credit side of a realization account. Now where to transfer what? For that, try to understand on this blank space on board. Now in format you will find realization account. If you understand this, then definitely you will get good marks. You will be getting 20 marks problem on this chapter. This is your realization account. Then after that, as I said, you have to open partners capital account. Now after partners capital, you have to open cash account as well. Then after this you will find, after cash, new LLP or private limited company account. These four accounts you will be getting in any problem. And then in a question you will be getting balance sheet and adjustments. If you just transfer the items from balance sheet to these accounts, then you will get 4 marks. For transfer stage we have 4 marks. Is it okay? Then now, as I said, here we have building, then after that we have investment, then after that we have cash and sundry debtors. On liability side we have capital, sundry creditors, then outstanding salary. Okay. And then in adjustment part we are having adjustment related to investment. Then in a transfer says how to transfer. As I said, you have to transfer debit side of a question, that means debit side of a balance sheet, that means in other word liability side of balance sheet, to the credit side of answer, that means credit side of a realization. Realization is general account, this is general account, and all these are the specific accounts. If a particular item is related to the specific account, then transfer that to the specific account. If that particular account do not have specific account or do not have specific space, then transfer it to the general space. As we have learned in first chapter also, जर त्याला स्वतःचं घर असेल तर त्याला स्वतःच्या घरी पाठवा, त्याला स्वतःचं घर नसेल तर त्याला धर्मशाळेत पाठवा. इथं आपली धर्मशाळा आहे रिअलायझेशन अकाउंट, तिकडे आपली धर्मशाळा मी सांगून झालेलीच आहे, तुम्हाला आठवत असेल. देन take the example. Here we have building. Building is given on a credit side. Therefore, you have to transfer this building to the debit side here. Building. Then investment. But as far as investment is concerned, we have adjustment. And if adjustment is there, then it is advisable to open that account also. That means what? As far as investment is concerned, we have separate space. Therefore, transfer this investment to investment account. But on which side? In a problem, they have given us investment on which side? Credit side. Therefore, obviously, in answer, you have to transfer that to the debit side of a investment account. Then after that they have given us the cash. As far as cash is concerned, we have separate space. Therefore, transfer cash to that account. But on which side? In a question credit. Therefore, in answer obviously on a debit. Then here they have given sundry debtors. As far as debtors are concerned, we do not have adjustment as well as the separate space. Therefore, transfer this to the general account here, sundry debtors. This is all about the transfer stage. No, one second. We have liability side also, that means the debit side also. Now capital. As far as capital is concerned, separate space. Therefore, to that space, in a question debit side, obviously in answer on a credit side. That means here you have to transfer by capital. And then sundry creditors. Sundry creditors to the general account. Yes, on a credit side of a general, because we do not have separate space. Therefore, credit side of a realization. Outstanding salary, we do not have separate space to the credit side. This is all about the transfer stage. That means what we have learned in a nutshell. आपको क्या करना है? क्वेश्चन क्रेडिट बोलता है तो आपको डेबिट में ट्रांसफर करना है, मगर डेबिट में किधर? स्पेसिफिक स्पेस हो तो उस स्पेस में, स्पेसिफिक स्पेस नहीं हो तो जनरल स्पेस में, दैट इज इन रियलाइजेशन अकाउंट. Getting what I wanted to say? I think so. You must have got. Now after this, what we will do, we will try, we'll learn next stage. After transfer stage, you will find PCU due stage. PCU due means what? Purchase consideration means what? Amount payable by new company or LLP to partnership firm. That is amount payable by new company. Now, what I will do, I will make it more comfortable. New company to partnership firm. This is PC due. Now in a PC due, you will find very simple formula: agreed value of assets taken over minus agreed values of liabilities taken over. Now agreed values of asset taken over means what? Agreed values of asset taken over. Now new company is saying you that I will take your furniture for 50,000. Let it be that in balance sheet for 1 lakh. They are ready to give us 50,000. They are not ready to give us 1 lakh. In balance sheet 1 lakh, that is the book value, but the today's market value of furniture is 50. Therefore new company agreed us to give 50. Therefore as far as furniture is concerned, don't see the balance sheet value, book value, but see the agreed value, and you will be getting agreed value in adjustment. If in adjustment that agreed value is not given, then you can assume. Now here, if agreed value is not given, then you can assume balance sheet value as agreed value. Yes. Now I think so you must have understood. You have to collect all given values in adjustment. That means all plus furniture value, building value, all values. If cash is taken, if cash is taken, then consider cash in purchase consideration. If cash is not taken, then don't consider. Here agreed values of assets taken over. If any asset is not taken over by new company or LLP, then don't include that in agreed values of asset taken over. Then agreed values of liabilities taken over. Now consider all liabilities taken over by new company. Sometimes new company takes the liabilities, sometimes they do not take. That depends upon their choice. Yes, if taken, then consider agreed value. In your book you will find sundry creditors value is equal to 1 lakh, but if that new company is taking only for 70, then here you have to write only 70. Don't write 1 lakh. There is two important points: agreed value and taken over. Yes, agreed value and taken over. Focus on these two words, then very easily you can calculate purchase consideration. As far as our answer is concerned, you will find yes, a format of this. Format is very simple: particulars, rupees column, and then here in a format you will find A, B and C part. To get the final purchase consideration, we will be deducting A from B. Correct. This is the purchase consideration due. एक बार ड्यू हो जाने के बाद हम इतना पैसा किससे मांगेंगे, न्यू कंपनी से मांगे, दे दो भाई हमारा पैसा. देन आफ्टर दिस यू विल फाइंड इन डी पार्ट परचेस कंसिडरेशन रिसीव्ड or receipt of purchase consideration. Purchase consideration received, this is not feeling good to the ear, therefore you can say purchase consideration received. This is the next stage. Now in this stage you will be getting, what you will be getting, that write down below purchase consideration received, cash or shares or debentures, etc and etc. And then always you will find due total equal to the receipt total or the received total. Yes, if both are matching, then you have calculated received purchase consideration correctly. Now this is all about the purchase consideration stage. And then finally, yes, you have to record this PC due as well as PC receiver in books of accounts, in books. If you do not record this in books, then what is the use of calculating it in adjustment? Just now we have calculated this in what? Notes, notes to accounts, or you can say in schedules. Now you have to transfer this, or you have to record this in books. Now how to record this in books? PC due. Now remember one sentence, or using golden rules also you can record. What is that sentence? PC due always appears on, always appears on credit side of realization account. PC due always appears on credit side of realization account. That means what? Now see our format. Now here always you will find what? PC due. Always you will find what? PC due. And we will going to write name of the company from whom this is due. That means what? By new company account, in bracket PC due, like this you have to write. And then obviously second effect to new company account, because here we have written in a ledger, you know the ledger rules, you can transfer the entry from ledger to journal. Here we have written new company, that means obviously this will appear in new company's account debit side, here to realization account. That means in a PC due you will find entry like this, what? New company account to realization account. And then after this you will find PC received entry. This is first entry, second entry is dues one entry and receipt second entry. Now in a receipt I already told you will be getting cash, cash is coming in, therefore debit to cash account debit. Then shares account debit. Then after that, yes, debentures account debit. If you are getting, then give debit. If you are not getting debenture, then why to give debit to debenture? This is a general entry. The things which we have got, which you have got, give debit to that. And then after that, to what? To who have given this to you? New company. We have got this from new company, therefore to new company account. Correct. And then transpose this to the our ledgers. Now here we are having cash. Correct. Therefore on a debit side of cash, write down new company. Now this entry is very simple. In a first entry we have asked the money from new company, and then a second entry, that company has given us money. That means we have to cancel that company's account from our books. We have created with debit. Now that means we have to cancel with the credit. In the second entry we have cancelled that with the credit. And as far as ledger is concerned, in a new company account, here we will find realization 5 lakhs. Against 5 lakhs what you have given, definitely you have to write that on opposite side. That means again 5 lakh, against 5 lakh we have got, suppose 4 lakhs rupees in cash and 1 lakh in shares. That means we cannot write 4 lakhs and 1 lakh on again on a debit side. If you write, then your account will not tally. Therefore you have to write on this on a credit side. If on a credit side of a new company, obviously, then on a debit side of some other account. Now, to which account? For that, what we have got, that is important. We have got the cash, therefore on a cash account's debit side. This is the simple ledger posting rules, you know. Here you will find that. Yes, very simple. Question say credit, you have to say debit. Then after that, remember one sentence: PC due always on a credit side. Then write down on a credit side of a realization, and second effect to the new company, because we have got from new company. And then after that, we have started with the credit, we have now given effect to the debit, due effect, new company account debit side. Then in the next entry, start it from the credit, because we have ended to the debit, you have to start to the credit, then start to the credit, and then again go to the debit, like this: credit, debit, debit, credit, credit, debit. Like this you have to remember. Very simple. You will find a flow. After solving one or two problems, definitely you will come to know that flow. You will be getting, yes, the interest in flow, or you will be actually feeling the things. Now after receipt of purchase consideration, then final closure stage. Close the close the ledger accounts. Close the ledger accounts. Now here we are having realization, then we are having partners capital, we are having cash, new company, and investment. First close adjustments accounts. That means here you have to first close the investment account, then check the profit or loss on selling of this investment, or the investment taken over by the partner. If that means you have to calculate the balancing figure of investment and transfer that balancing figure to realization, profit or loss of investment transfer to the realization. If balancing figure on a credit, you have to transfer it to the debit. If balancing figure on a debit, then you have to transfer it to the credit side of a realization. And then after this, close new company account. This will be closed automatically, no need to close separately. You will find automatic closure. And then after that, close realization account. First close this what first close investment adjustments account, second close new company account, thirdly close realization account, transfer balancing figure of a realization to what? Partners capital account, debit side balancing figure to the credit side balancing figure to the debit side. And then after that, close partners capital account and transfer balancing figure in cash account. Again, debit to the credit to the debit. This is the accounting procedure in the books of in the books of. Now what to close, that I have already explained. Now what you have to close first, adjustment accounts, then you have to close next what, new company, then you have to close realization, then you have to close partners capital, and then finally you have to close cash. This will tally automatically. Will tally automatically. This is all about the theory of, or the accounting procedure of closing partnership business. We have to learn accounting procedure of opening new LLP and then partnership firm, but that we will learn in a next lecture. Now then what to do, this is if I do not give you idea about, if I do not teach you yes, one problem, then you will not understand. Therefore I will teach you one problem. Now in your book you will be getting that problem. Now they have given accounting entries. Now very easily you can pass these accounting entries. Now see, these are the accounting entries related to what, dissolution of firm. Just, do you want to learn, do you want to read? I think so you can learn at your home also. Now I think so some students, so much buffering is going on, therefore I think so students lost their interest. Now definitely we'll be watching this after the lecture. Now record is going on. Now here first they have given entry of, now this is third, transfer of undistributed profit and reserve to the partner's capital account. As far as capital is concerned, you will find capital as well as undistributable reserves. Undistributable reserves are also part of what, are the part of the capital only. The place where we write capital, you have to write reserves also, because reserves are what, these are what, set aside profits, and this profit belongs to whom, this profit belongs to the proprietors only. That means what, this is the part of capital only. In a proprietorship we know we add net profit in capital. That means what, net profit is a part of capital and set aside profit also part of the capital. Therefore we have to transfer undistributed profit and reserves to the partner's capital account only. Now you will be getting those reserves on the debit side, that means on the liability side of balance sheet, obviously that you have to transfer then on a credit side of partner's capital account. Credit side of partners, therefore credit to, therefore credit to partners capital, here credit to partners capital and debit to that reserve. Then after this then after this transfer of all assets and liabilities, the entry of transferring all assets. Now where you have to transfer all assets, you have to transfer all assets to, you will be getting assets on which side, yes, on credit side. Therefore you have to transfer this to the debit side of realization, therefore realization account debit. And to cancel assets, obviously to another account we have to give credit. And then after this you will be finding transfer of liability entry, that is liability to realization. Liabilities on debit side, you have to transfer those to the, yes, credit side. In balance sheet that is on debit side, then you have to transfer this to the credit side of a realization. Now purchase consideration due, as I said, purchase consideration will always appear on a credit side of realization, therefore credit to realization, and from whom you have got debit to that account, Pvt Ltd or LLP account debit to realization. Then after that, the purchase consideration received, uh, you will be getting in a form of a cash, equity share or debenture, give debit to that, and then from whom you have got, give credit to that entry. Then asset not taken over. If asset not taken over by company, then we have two choices. Yes, either to sell in market, or yes, to transfer that to transfer that to whom, transfer that to partners. Now if you are selling, then you will be getting cash. That means what? Cash or bank account debit comes in, therefore debit to what? To that asset. If you have opened separate account, then that asset name will come here, fixed asset account, or say building. If you have not opened the separate account for building, still adjustment given, then you can write here realization. Then why have they written realization? Because here they assume that no separate account for building, therefore they have written building also in realization here. Instead of writing building, they have written realization. उसका सेपरेट अकाउंट हो तो इधर क्या आएगा? बिल्डिंग आएगा. उसका सेपरेट अकाउंट नहीं है तो क्या आएगा? जनरल अकाउंट रियलाइजेशन. यानी बिल्डिंग अभी भी है, इट इज ऑन अ डेबिट साइड ऑफ रियलाइजेशन. आप सेल करते हो तो ऑब्वियसली यू हैव टू राइट दैट बिल्डिंग ऑन अ क्रेडिट साइड. देन एसेट टेकन ओवर बाय पार्टनर, sorry, this is sale taken over by partner, you have to cancel that asset. Now how to cancel? By giving credit, cancel that asset, and then whom have taken capital, partners, therefore on a debit side of partners. In this chapter you can remember my famous sentence. What is that? If we want to create asset, then give debit to asset. If you want to cancel the asset, then give credit to asset. How to remember? Assets are originally having debit balance. For create, same balance, that means same debit and credit. Liabilities are originally having credit balance. To create, give same debit and credit. To cancel, you have to give debit and credit in opposite manner. That means if asset you want to cancel, then give credit. Liabilities you want to cancel, then give debit. To create debit, to cancel credit. As far as liability is concerned, to create credit, to cancel debit. If you remember this, I think so, then you can pass any entry. Then realization expenses. Realization expenses, we are paying realization expenses going out. Yes, therefore obviously in a form of a cash not given, then you can assume that realization expenses are going out in a form of a cash, therefore credit to cash. And then we have to give debit to realization expenses, but we do not have realization expenses, therefore transfer this to the common account. Yes, realization. If you have realization expenses, transfer this or give debit to the realization expenses. If you do not have, 99% you will not get realization expenses, no need to open actually, therefore realization account to cash account. Then after this you will be getting profit and loss in realization. Yes, that balancing figure, calculate balancing figure and transfer it to partners capital. You can very well transfer. Then after this, the final settlement made entry. Final settlement, that means either pay cash or take the cash from partners. Either paid equity shares to them or debentures to them, or what, ask them to contribute in a form of cash. This is all about the entries. Then after that we will be reading one problem. This problem number 1. Problem number 1. Now what I will do, I will save this first. see this on desktop. This is problem number 1. In problem number 1, they have given A, B partners balance sheet. They are sharing equal profit and loss. Then balance sheet, asset side, liability side. Balance sheet, liability side, will be getting capital, creditors, wise loans, bills payable, then building, plant, stock, and then all. Then after that, the limited liability partnership was incorporated. Yes, that means we are converting from partnership to the LLP. And then they have given AB will be the partners in LLP sharing profit and loss equally. Yes, AB are the partners sharing profit and loss equally, contributing 3 lakhs each. Correct. For starting new business or for modification of a business, they have contributed 3 lakhs each. Correct. And in LLP, they will be sharing equally. And then all assets except cash and investment taken by LLP. All asset except cash and investment. That means what? That cash will not come in purchase consideration. जो जो लिया है नया कंपनी ने वो सब आ जाएगा परचेस कंसिडरेशन में, बाकी का कुछ नहीं आएगा. अभी थोड़ा सा हम एक्टिव बन जाते हैं, नहीं तो बोरिंग हो जाएगा आपको वीडियो. ना ये कैश किधर आएगा? कैश किधर आएगा? यस, एडजस्टमेंट में आएगा, नोट्स सेपरेट अकाउंट में आएगा, पीसी में नहीं आएगा, क्योंकि नया कंपनी ने लिया नहीं. जो नया कंपनी ने ले लिया वो पीसी में आ जाता है. देन आफ्टर दैट द वाइज लोन वाज पेड बाय द पार्टनरशिप फर्म. फर्म ने पे किया है, ना कि नया कंपनी ने पे. नया कंपनी ने नहीं लिया भी नहीं है और पे भी नहीं किया है, तो ये भी पीसी में नहीं आएगा, पीसी में नहीं आएगा. देन इट डिस्चार्ज बाय टेकिंग ओवर इन्वेस्टमेंट एंड कैश बैलेंस. ये लोन कैसे पे हुआ? इन्वेस्टमेंट जो हमने नहीं दिया था और नहीं लिया था शायद एलएलपी ने, वो क्या करेंगे? इन्वेस्टमेंट ये वाई लोन को दे देंगे, वाई को दे देंगे. आपका लोन था, ये इन्वेस्टमेंट ले लो और बाकी का बचा हुआ पैसा हम आपको कैश में दे देंगे और आपका हिसाब खत्म करेंगे. लाइक दिस दे आर सेइंग. देन इन फोर्थ एडजस्टमेंट, एसेट्स वेर रीवैल्यूड. 1,30,000 building 1,35,000, stock 70. That means yes, with these values the new LLP has taken building, stock and goodwill. These agreed values are important in PC and they have given agreed values. These are all agreed values. And this purchase consideration received in cash and then shared by partners in a profit sharing ratio. PC आपको मिला है पूरा की पूरा कैश में और आपने वो शेयर भी किया है. और इसके बाद में आपको बैलेंस शीट मिलता है, सोल्यूशन मिलता है. ये सोल्यूशन में रियलाइजेशन अकाउंट उन्होंने बनाया है, नया कंपनी का अकाउंट बनाया है, कैश बनाया, पार्टनर्स कैपिटल, इन्वेस्टमेंट के लिए एडजस्टमेंट था. तो यानी इसलिए उन्होंने इन्वेस्टमेंट का अकाउंट ओपन किया है. वाई का भी एडजस्टमेंट था, वाई का अकाउंट, वाई लोन का अकाउंट बनाया है. नाउ व्हाट विल डू? Now we will follow. Now this is the format. In a format they are saying us. Now what I will be solving this problem. Okay, on one part of a screen you will be getting problem and on another part you will be getting solution. Okay, now step number 1. Step number 1. Now how to remember the steps? Now first we are having here I think so, some Okay, we will be solving. Now as I said, there is problem in Haribol. Okay, now we'll be starting. As I said, in solution you have to open some accounts first. Now as far as these accounts are concerned, you have to open first what? Realization account. First realization account. Then after this, then after realization, next you have to open partners capital account. Here we are having two partners. Therefore both partners accounts after partners capital account, next you have to open cash account. After cash account, is new company. Now here new company name is new company A and B LLP is account. Then after this we are having adjustment related to investment, therefore investment account. And then after this is we are also having adjustment related to wise loan, therefore wise loan account. The format is over. Some mandatory accounts and some is voluntary accounts. Which are mandatory, which are voluntarily you have to open. I think so I have explained. Realization is mandatory, cash is mandatory, AB LLP new company's account is mandatory. Partners capital is also. Now in the books of write down in the books of A and B. as on you can write. This is the realization. On debit side of realization, this is debit side, credit side. Now after format, the next stage is transfer stage. In a transfer stage, transfer all the assets and liability at their respective place. If place is available, at that place. If not available, to the common account, that is realization account. Now start with the assets. Here we have building. Here we have building. Then where to transfer building? Where to transfer building? Yes. Do we have separate account for building? No. This is given on a credit side, debit side. Now given on a credit, that means you have to transfer on a debit side. That means here to building. Say to building 1 lakh. Then after this, plant and machinery, we do not have account. Say plant and machinery 1,50,000. Then after this, furniture, do we have? No, we do not have. Then furniture account, furniture 25,000. Then after this, we have stock. Do you have stock account? We do not have stock, therefore in realization 75. Then debtors 1 lakh. Then sorry, no, okay, debtors account. Then after that, next cash account. Cash, we have cash account, therefore cash account which side? We are transferring credit to the debit. Cash is also on a credit, therefore you have to transfer, but in a cash. Don't write again cash. Yes, जैसे मैंने बोला था फर्स्ट चैप्टर में, घर में आपको आपके नाम से नहीं बुलाते होगे, कुछ कॉमन नाम होगा. आपका नाम सपोज संजय है, घर में आपको संजू बोलते हैं. यानी क्या? ये कैश का घर है, कैश के घर में कैश को कैश ही नहीं बोलेंगे, उसको क्या बोलेंगे अभी? ये संजू बोलेंगे. यानी क्या? टू बैलेंस brought down. We cannot write cash here. Yes, 45,000. Write down that 45,000. And then after that, as far as investment is concerned, now on a debit side of investment, yes, in investment name is matching, therefore to balance brought down. To balance brought down 5,000. That means we have transferred all. Then after this, transfer all liabilities. Liabilities are given on a debit side. You have to transfer all those liabilities on a credit side. First they have given capital. Do we have specific place? Yes, we have specific place. Therefore on that place, by balance, this is capital, capital is given. Therefore say by balance brought down is and B, A, B. Now by balance brought down, A's capital 1,50,000 and B's capital also 1,50,000. Now after transferring these balances, now creditors, do you have creditors account? Yes, we do not have creditors account, therefore in a common place, by creditors 75,000. Then after this, by wise loan, do you have wise loan? That means yes, we have. That means specific place given, by balance brought down. By balance brought down 1 lakh. Then bills payable, we do not have bills payable, therefore in realization, by bills payable account. By bills payable account 25,000. By bills payable 25. Here we completed transfer stage. How much marks we will be getting now? 4 marks. We will get this 4 marks because we have transfer credit to the debit and debit to the credit. Now then next stage, PC due and PC received stage. Now working notes. Working notes. Now first working note, PC due, calculation for PC due. Now PC due format is very simple, particulars rupees rupees. A part assets, B part liabilities, and C part PC due in bracket A minus B, and then D part of PC or PC received. Okay, now what new company has taken over, that you have to write in PC due. Now for that, read second adjustment. In second adjustment, what they have given, all asset except cash and investment taken over by LLP. Now except cash and investment, write down all assets. Building, then plant and machinery, then furniture, then stock, then debtors. What about their values? Now in a fourth adjustment you will get their values. Building 1,35,000, right in inner. Then after that the stock 70, in the front of stock write down 70. Then after that the goodwill. Now goodwill is there? No, but given, therefore write down goodwill also. Goodwill 1,50,000. And what about other assets? If values are not given, you have to assume balance sheet values as taken over values. Now taken over values, plant and machinery not given, therefore balance sheet value as it is 1,50,000. Then furniture 25,000. Then after that the stock 75. That stock already written. Yes, stock already we have written. Then after that the debtors not given, therefore balance sheet value 1 lakh. These values are given here. Now check. We are just writing here. Correct. Then after this the liabilities. What about the liabilities? Which liabilities taken? All the assets given taken. What about the liabilities? Liabilities are taken or not? No, nothing has mentioned about the liabilities, and only why loans we settle. Yes, only why loans we settle. Therefore we can assume that now here they must mention, because if you check the answer, then answer in PC due you will get yes, bills payable and creditors. That means bills payable and creditors taken. If nothing has mentioned, safely you can assume, you can write the assumption that liabilities are also taken, because they have not mentioned about their sale, they have not mentioned about whom, the which partner have taken. Therefore yes, we can assume that liabilities are also taken. If they have given about their sale, or if they have given about their taken over, then ignore those and write other liabilities in liabilities. Why loan paid, therefore don't write. When other than why loan you will find creditors and then bills payable. Correct now. This we have already written in separate account. Yes. And this is settled also, therefore don't write. Then creditors, as far as creditors are concerned, we have their 75,000 amount, and then bills payable 25. Actually in question they must mention all assets and liabilities, but they, I think so, they forgot to write liabilities. Safely you can assume, you do not have choice. Then do the calculation and then transfer it to the outer. Now 1,35,000, and then all use the calculator. Now here we have answer, you can check that in answer. We can check now 120, 70, 150. That means their total 6,30,000. You can do the total. Yes. Now here I can open my calculator, but no need, because same figures are there in answer also. and then purchase consideration due. Finally you will be getting 5,30,000. 5,30,000. And then after this, receipt of purchase consideration. Against this, what we have got? Against this, in a fifth adjustment they have given that we have got the cash, only cash, 5,30,000. That means total receipt of purchase consideration is 5,30,000. Is due is matching with receipt? Yes, due is matching with receipt, both are same. Always you will get this same. Now over, due part and receipt part is over. Now then next what? Pass the entries of due and receipt in main books. Now here, how to remember? Purchase consideration due always appears on which side? Credit side of a realization, or use golden rule. Which two accounts are involved? We have got the consideration from new company. New company means the what? New company means the personal account. Debit is the receiver, credit is the giver. Here new company is giving, therefore credit to new company and debit to, yes, realization. Realization is a temporary account that is not having what personal real nominal form as such. Therefore here write down new company or A and B LLP account in bracket PC due. How much is that amount? I think so that amount is 5,30,000. 5,30,000 rupees. Correct. Now don't check the answer. 5,30,000. As per ledger rules, you know you have to write same thing on a debit also. Now on which accounts debit side? Here we have written that AB Limited debit side. AB Limited, that means AB LLP by realization 5,30,000. बीच में मैंने जोक बताना चाहिए मगर अभी मैं भी बोर हुआ हूँ, चलेगा। थोड़ा ही प्रॉब्लम बाकी है, वो ख़त्म कर देंगे, फिर आप आई थिंक सो आराम से देख सकते हो. In between you can pause also, you can do other work also. Yes. Then after this what? Due. After this due entry, purchase consideration received entry, cash account debit. Okay, we have ended here. Yes, by therefore start with this account only. We have written due on a debit. Obviously receipt is opposite to due, therefore that will come on a credit side of new company. 5,30,000. 5,30,000 due, receipt also 5,30,000. As per ledger rules, cash accounts debit side. Cash account debit side what? AB to A and B LLP 5,30,000 rupees. 5,30,000. Now after this what? Due is over, receipt is also over. Now next what? Adjustment stage. Correct na? Adjustment. Now adjustment stage, you have to complete the adjustments also na? We have completed balance sheet. Okay, some part of adjustment is also over, but some part is remaining. A and B contributed 3 lakhs each in what? LLP. Here we are making books of A and B firm. That means this is not related to firm. They have contributed in LLP. Therefore this will not appear in our old books. This will appear in LLP's book. Then second adjustment we have covered. Now third adjustment, why loan was paid by partnership firm. It is discharged by taking investment. That means you have to give this investment to Y. Y is loan. Now then giving means cancelling investment. Yes, how to cancel? By giving credit. Investment is the asset. You can cancel asset by giving credit. And to whom you have to give? Y is loan. Y loan account. Y loan 5,000 rupees. As per golden rule also, investment, real account, going out, credit to investment, and then debit to who have taken. Y is loan, personal account, debit is the receiver, Y is the receiver. Therefore here to investment 5,000. And then what they are saying, the balance taken over investment and balance in cash. We paid Y's loan balance amount in cash. That means here total loan is 1 lakh. Balance loan you will get on a debit side. In cash we paid. Therefore here cash. Yes, this account question. And therefore as per the ledger rules, second effect to the cash by Y's loan. By Y's loan 95,000. Okay. That means we covered third also. Now fourth we covered that, and then fifth also we covered. That means we covered full balance sheet as well as adjustments. Problem is over. Now last stage, that means the closure stage. In a closure stage, as I said, you have to close first adjustment accounts. Now as far as first adjustment account, that means investment, will close automatically. On a debit side 5,000, on a credit side 5,000, no profit or loss. No need to transfer anything to anywhere, just close. And then here also you will get 1 lakh, here also 1 lakh. There's no need to transfer anything. Then after this, as I said, close what? Close realization account. Now close realization account, use calculator. Where is calculator? This is our calculator. Now debit side, take the total 1 lakh plus 1,50,000 plus 25,000 plus 75,000 plus 1 lakh. How much is total? 4,50,000. From that, okay, that means from that you have to deduct credit side 75,000 minus 25,000 minus 5,30,000. Negative. That means balancing figure is on debit side 1,80,000, and total if positive, then balancing figure here. You can start from the credit also. This depends upon your own way how you balance. I generally take any side. The side which we take first, balancing figure if positive, then appears on next, that another side. If the negative answer, then balancing figure will appear on the same side from where we have transferred started. Now 530 plus 1 630, and then here also 6,30,000. Now both partners are sharing equal profit and loss. Therefore to A to B amount 90. Correct. This is balancing. Now debit side of realization, obviously that means credit side of partners capital. Credit side of partners capital by here realization, by realization 90,000 and 90,000. Correct. Then close what? In between you have to close this LLP account 5,30,000. This will close automatically. Or then after this close partners capital. Now partners capital here 150 plus 90, 2,40,000. Here also 2,40,000. Here 2,40,000, 2,40,000, and then nothing is there on a debit side. Therefore to cash 2 lakhs 40, 2 lakhs 40, and then cash account, then credit side by A, by B 2 lakhs 40,000, 2 lakhs 40,000, and then finally take the total. You must get equal. Now 45 plus 5 lakhs 30,000, 5 lakhs 75, and then 95 plus 2 lakhs 40 plus 2 lakhs 40. How much? 5 lakhs 75,000. Debit total is equal to credit total. That means our problem is over, and that is tallied also. Yes. For this you will get 20 marks. Thank you, my dear students. Now here we will be stopping.